Hello, I'm Jonathan Moyes, Head of Investment Research at Wealth Club, and today I'm with Fred Soneya, partner at Haatch Ventures, to talk about the Haatch Enterprise Investment Fund. Hello Fred, welcome back to the studio. So we're talking about the EIS fund. Just quickly, what is the EIS fund? What does it aim to do?
So the Haatch EIS fund is a fund which raises throughout the entire year. So an evergreen fund. We have 4 closes a year, and we give investors a portfolio of between 4 and 6 revenue generating digital companies.
And Haatch Ventures, who are they and what's your role there?
So I'm one of the 2 founders and we're 4 partners. We've been around since 2013. Between us as the founding team, we've had over $200 million of personal exits. And actually, for the first 5 years of Haatch, we invested our own money and had no open funds. Alongside that, we built another business, which we sold. And it was a venture-backed business. So we've been on the side of a bootstrapped business that we've sold and also a venture-backed business that we sold. And then we launched our first ever EIS fund in 2018 and brought our EIS fund to Wealth Club clients a couple of years later.
Remember it well. So turning to where you invest, there's particular sectors that you like, isn't there?
So we are B2B software as a service. So we invest in business-to-business technology companies that have reoccurring revenue. And for our EIS fund, they always have at minimum £120,000 of annualized reoccurring revenue, but ideally more. So this is definitely a slightly later stage fund where there's already some fundamentals in place. In terms of sectors, there's 2 sectors that we're very active in at the moment. One is fintech, so technology in the financial world. And secondly is kind of future of enterprise, which is a bit broader, but ultimately it's around companies disrupting legacy platforms, legacy systems, and kind of paper processes.
Very good. And do you have any examples of companies you've backed recently?
Yeah, so a great example I'll start with is Yaso, because today we're announcing that they just raised a $11 million Series A round led by Puma Growth Partners. And we first backed Yaso from our SEIS fund. And I think this is a great example actually of how our EIS fund invests, is that our EIS fund has the advantage of not only investing in new companies, which we don't already have exposure to, but also using the 12 to 18 months of information rights from our SEIS fund companies and our legal ability through the pre-emption clause to be able to invest to get allocation in really hot deals. And Yaso, when they raised their seed round and our EIS fund invested, didn't go out to market. It was a closed round. But the reason our EIS fund had allocation is because we'd backed them from our SEIS fund before. And I think it's worth saying that our EIS fund is not there to extend the runway or just invest in SEIS companies. We do the same amount of diligence, the same amount of detail, and we treat them just like we would any new company. But we have that small advantage that instead of just doing diligence over a 1 or 2 or 3 month period, we've probably been doing diligence over a 12 or 18 month period. And Yaso is really exciting because they're a platform which takes or enables global brands to launch into China. And they provide the technology to do everything from live streaming to logistics to on-the-ground e-commerce and payments and translation, which is obviously really important in that market.
So were it not for your SEIS funds, the EIS fund probably couldn't have allocated.
Wouldn't have had access, and nobody else had access. It was only people that were already exposed to the company. And that's quite a common theme in hot rounds. So making sure that you have allocation in rounds is really important.
So Fred, how often does that happen that you have pre-emption rights and you follow on with the EIS fund?
So we always have pre-emption rights. It's then our investment team and ultimately our investment committee's choice around whether we take them up or not. So when a company that we have pre-emption rights in comes to market to raise more money, we will assess them just like we will any new company. And ultimately, as we build a portfolio for investors, say of 6 companies in an EIS tranche, we will constantly be weighing up that company versus the other options that we have to create the best portfolio for investors at that time.
And roughly the split, I know it's going to vary tranche to tranche, but is it maybe a third of your deals, a tenth of your deals?
The most recent tranches, it's been around 50-50. So maybe 3 companies have been existing that we've had exposure to from the SEIS fund, and 3 have been new, sometimes kind of 4 and 2. But I'd say that's roughly.
Oh, very good. Any other examples in the portfolio?
Yeah, a great business called Streamkap. So we backed Streamkap a couple of years ago, pre-revenue. And Streamkap is a platform that enables developers in any kind of organization to stream data between platforms in real time. So getting rid of the old kind of scheduled batch jobs that ran at 1 a.m. or 2 a.m. in the morning, so that every platform in the organization has real-time data. We validated this deal or opportunity by speaking to all of our portfolio founders, CTOs, and also in our network, there's a number of our underlying investors as CTOs, or platform people at FTSE 100 companies. And the conviction behind this problem was just massive. So we had to back them. Since we backed them, they've grown into a multi-million pound annualized revenue business and raised a seed round from a US-based VC. And actually now all of their growth and expansion is focused on the US. And really pleased that one of the co-founders moved to California earlier this year to head up the US and to grow out there, which is really paying dividends for them.
That's good commitment. Very good. And so I guess the ultimate goal is to create some exits. You've been reasonably busy this year for exits. Any good examples you can talk about?
Yeah, so we've had 4 profitable exits this year, 2 from the EIS fund, and we have another in legals at the moment. So it should take us to 5 profitable exits for the year. For the EIS fund, there's a great example in a company called Reflow. So Reflow is a workflow management platform, business that we first invested into from an EIS tranche in 2020. And then we actually reinvested from another EIS tranche in 2022. So a company that didn't have the perfect kind of growth story. They were growing well, but they needed some more money. And we doubled down, which has really paid dividends because earlier this year, they were acquired by a private equity firm in an all-cash deal. Our investors in our EIS tranche in 2020 received 6.5 times cash, their money. And our investors from the EIS tranche in 2022 received 4.2 times cash, all before tax relief. That was obviously all a bonus on top.
And turning to just the exit environment in general, it seems like, and definitely your exits are kind of alluding to this, there's more secondary involvement now in exits. And it seems like SEIS and EIS, SEIS in particular, I'd say, there's more secondary exits happening now than in previous years. Is that something you're seeing?
Yeah, so I think if I look at the deals that we've completed this year, 2 have been secondary and 2 have been kind of complete company sales. I think in the secondary market, you as an investor are going to market and creating that liquidity for investors. And you can do that in companies that are really hot, where people want exposure to them but can't get in. And actually, Native, which is another company we sold this year, is a great example of that because there was investors knocking on their door wanting to invest, and the company didn't want and frankly didn't need their money. But these investors really wanted exposure. They had a thesis, they had a strategy around it, and therefore we created a market by selling the stock that we owned to them. So I think secondary can be a really important factor. Of course, there's a downside or a challenge that you need to go in kind of eyes first with, which is around selling short or selling too early. But ultimately, I think having the ability to sell with the information in front of you at that time is really important.
And turning to risks, how do you describe the risks within the EIS fund?
So the EIS fund is investing in revenue generating companies. At the very minimum, these companies are doing £120,000 of annualized recurring revenue. So not just any revenue, but this is revenue that's contracted, that continues to come in with low churn rates, single-digit % churn rates. But of course, there is some risk. So we try to mitigate those risks as best as possible, obviously through sourcing and diligence, also through using those information rights we spoke about earlier from our SEIS fund, and secondly, in creating a portfolio that's a reasonable size of companies. And we've chosen 6 companies as the target size for portfolio. Sometimes it's 5, but the target is 6. And we feel that 6 is the right number to give a balanced portfolio, but not where there's too many companies that the outlier success doesn't kind of benefit the entire fund. Because if you go and invest in 20 and you have one company that hits that home run, it may not return the entire fund. The other 19 are still in play.
And you've got to find 20 deals in that short space of time.
Absolutely, yeah.
And I guess if you're an investor, you can always invest in multiple tranches and get.
And we do. So a typical Haatch investor will invest in 2 or 3 EIS tranches a year, maybe an SEIS tranche. So if you think about just from the EIS perspective, you could end up with 18 companies throughout the year. That's a really nicely sized portfolio, managed by ourselves, and investing alongside British Business Bank.
Very good. So Fred, taking everything we've just discussed, For those that want to back an EIS fund this year, why should they back the Haatch EIS fund?
The Haatch EIS fund has a very strict investment thesis around backing entrepreneurs who are already revenue generating, helping de-risk investment and kind of speeding up that timeline to exit. Every single investor invests alongside British Business Bank. We've raised £27 million from them over the last 2.5 years. And the EIS fund is managed by a team with over 200 million in personal exits.
Very good. Fred Soneya of Haatch Ventures, thank you very much.
Thank you.
If you're watching on YouTube, please press like or subscribe to the channel for more.